What's up, everyone? Welcome back to the Cameron Hodge Show. Today I have a very special guest. So if you are interested in real estate, whether you're an agent, a lender, or just someone who's concerned about their own situation going on with these bank closures, lending, rates, and just everything, well, I got someone today who has been in the business for many years, and I think he always brings a clear insight to what's going on because, one, he's on the ground doing it, but two, also, like, honestly, he's been a huge part of my business success and growth in the last couple years, so I'm very happy that I got him on today. Brian, thanks for being here, man. I appreciate it.
I'm excited to be here, as always. It's always fun to be on the Cameron Hodge Show.
I know, right? It's new, but it's coming.
Talk, right? Yeah, like this. Yogi Berra's got a great quote when we talk about the banking crisis. It's deja vu all over again.
Why?
So, well, we've been through. I've been through 3 of these.
True.
The SNL.
See, I'm only 29, so for me, this is probably
it's only
first one that I'm old enough to know. Well, it is, but it's the first one I'm old enough, because before, it's like always the funny saying a lot of millennials say. It's like, should have been buying houses after the 2008 crash when I was in middle school or high school. What was I doing?
Right. Yeah. Well, wait long enough, it'll happen again. And so if there's one thing we know about real estate, it goes up, it goes down. And a lot of the things which are part of that is whether there's liquidity. Whether you're buying a house or whether you're buying a commercial property, if there's liquidity problems, then real estate goes down or it gets harder and harder to buy. So, when I was in college, we went through the savings and loan crisis. That's where we had all these savings and loans going out of business because they were, in some respects, a lot similar to today. They were. Their cost of funds was more than their cost of loans. Banking's pretty simple. You pay depositors money, and then you can loan out usually 10 or 20 times that amount, somewhere between 10 and 20 times that amount, and you try to charge more for the money than you pay for it. It's like any business. Sometimes when the yield curve gets inverted, when you have the Fed's tightening, you'll see short-term rates will creep up. And loans are usually for anywhere from 5 to 30 years. Mm-hmm. So, if you're paying 4.5% for deposits and you've got a bunch of loans on the books at 3%, that's a recipe for disaster. And that's kind of what happened in the SNL crisis. The 2008 and 9 meltdown, that was more of a credit issue. They were making bad loans to people who couldn't pay them back. This one feels a lot like the savings and loan crisis. So,
in what way?
Well, to give you a background, so we had COVID,
right?
And everybody went home and got checks. They held on to those checks. They put them in the bank. A lot of businesses really benefited from COVID. Amazon, the tech sector did well, and one of the big banks in the tech sector was Silicon Valley Bank. And so their deposits skyrocketed during COVID. Mm-hmm. That's a bit of a problem because they're paying interest on those deposits. They've got to put it to work. So instead of making loans, they bought a bunch of 10-year U.S. government treasury bonds and locked them in at 2.5% or 3%. Mm-hmm. And guess what? Like when the Fed started hiking rates, in order to remain competitive, Silicon Valley Bank had to offer interest on those deposits and more interest. And as they offered more interest than the 2 or 3%, they started losing money. They weren't paired off properly. Mm-hmm. And those bonds that they were holding on their books lost value. Because if you're holding a 3-year bond on your books and you could go out and invest in the same duration, say at 4.25, which you could have at one point, that means the value of the 3% bond goes down. And so they have to do a thing called market to the market. They have to take those unrealized losses, and it affects their reserve ratio, which is the amount of money they have to keep on hand that they can't lend out. And it eats into that reserve ratio. And in SVB's case, and in many of the other people that went through this, banks that went through this, as those reserve ratios shrunk, the Federal Reserve stepped in and said, you got a problem. And depositors started running out of the bank. And so when that happens, you had this little bank run, liquidity crisis, and, the Fed steps in and says, you're closed. What's that mean? I mean, when we lose these community banks and we lose these regional banks, just like when we lost S&Ls, we're condensing into, market share is gravitating to the big banks, the Chases, the Wells Fargos, Bank of America. And as they get big, Citigroup, as they get bigger and bigger, as they get all those deposits from these local banks, it's a cycle. And these little community banks go out of business. And that's not good. Because community banks make 30% of the commercial real estate loans. Community banks are involved in residential lending where they're making loans to residential for houses and then they're selling them off. It creates a problem. Now, combine this fact that the higher interest rates have slowed down the residential mortgage business and the residential brokerage business tremendously. You have a lot less transactions in real estate than you did 3 years ago, right?
Well, here, why don't we break it up? Because I know I have a lot of different people that listen to this. We got consumers, your average everyday American. We have agents that listen to the show. We have people who want to invest in real estate or are currently investing. Why don't we start with regular everyday Americans? What does this mean to them? Everyone gets scared. Is my money worth anything? What does it mean to them? Because most people are like, hey, it's great, but what does that mean?
So there's less choices. Two problems. One, interest rates are higher. And I don't think that'll go on forever, but it's not turning around in 3 months. So interest rates are higher, and that means that if you're buying a $500,000 house, 2 years ago, and you could have gotten a 3% rate, today you're going to get a 6% rate. So it's going to cost twice as much in interest. So that's the first problem. Second thing is there's less choices, and there's mortgage companies going out of business, and that's not good because less choices means now you can't shop it like you used to. So there's less choices for consumers. What
happens if I have a mortgage and whoever owns my mortgage at the time goes out of business?
Whatever. It gets sold to someone else.
Cool. The reason I asked
you
that
still owe the,
we know
still owe the money.
I know we know that, but I know someone's going to watch this and they're going to have that question.
You still owe the money. Someone will buy that loan.
Yeah, always. In fact, I think most people who have owned a home more than 2 years will know that they've gotten multiple letters all the time of, you got a new bank servicer, time to move your login info and it's such a pain in the butt every time. All right, agents. What does it mean for them? We're active in the business, but
I think agents, and I've been saying this for a year and a half now. Like, you guys got to get tough because the number of transactions is down. And and by the way, when you've got 2/3 of this country sitting in 2.5% and 3.5% mortgages, they're not moving because they go, hey, do I want to move up? We'll take millennials, for example. Older millennials are the perfect move up buyers. Yeah. They're not moving up because they're sitting on a 3% loan for, let's call it a $500,000 house. If they went out to look at an $800,000 house, which naturally they're going to do, it's not just more expensive in terms of taking on a larger mortgage, but now that larger mortgage costs twice as much in interest. Yeah. So they're just hunkering down and they're not selling. So for agents, this means you really should be trying to control the listing side of the business. There's plenty of buyers out there. Yeah. And at a certain point, buyers will back off.
Yeah. No, that makes sense. Yeah, well, I feel like a lot of agents are discounting. It's so funny. I've only been in the industry 3 years into this year, but I've seen it started to change a little bit. What's funny is you start to even get title reps and stuff reaching out. Like, bring us your business. I'm like, yeah. I'm like, whatever.
Where were you 2 years ago?
I know. I'm like, yeah. I'm like, yeah, whatever.
Another thing for consumers, which I think is important, is I'm going to flip this back. Then we'll talk about investors, but consumers should be working with real estate agents who have good connections with lenders and who understand the process. Like, you're 3 years, you know more about lending than most real estate mortgage originators do.
I have a desire for creativity and solutions. I still have transactions where the other agent will be helping veterans and like, all my veterans go to Veterans United because they're the best, or Navy Fed and they're the best. And I'm like, stats kind of push against that personally. I'm like, sure, some people might. I'm like, but you can't say all veterans are great going to one servicer because it's a VA loan. Most people have VA loan, and everyone's a different situation, scenario, credit score. Like I think it's ignorant to say one provider brings a solution for everyone because this doesn't happen.
Well, the other thing I'll say, and I'm saying this kind of selfishly, but I've worked in many facets of lending. I ran a residential lender. I think mortgage brokers are offering the best deals and flexibility out there. Mm-hmm. And so if you're working with an independent mortgage broker who's been around the block and seasoned, why is this important? Home Point went out of business, by the way. Home Point was one of the main providers we went to, and they just up and closed because of volume. So imagine if you have a transaction in there with them, and or you're thinking you're sending a loan to them, and you're out there finding a house, and they're gone. A mortgage broker can shift and move. And by the way, there's more companies going out of business. They will. The volume's not there. Some of them don't have good liquidity. A lot of direct lenders that you hear about are basically brokers with a big credit card. Yeah.
Well, you've been, obviously this is like you've been through multiple crashes and financial crises. Being a newer agent, I know there's a lot of us that have gained licenses, and I know NAR is talking about pushing dues up, and they're losing their people paying the mafia at this point. I think I've noticed this. Maybe you can talk more on it. Being an agent, I've noticed a lot. Oh my God, I feel like I'm getting blown up with people wanting to take my money. Like all of a sudden, it gets tight. And most agents are struggling, and now all of a sudden all the coaches and like the lead solutions come out of the woodworks. Is that something you typically see when things get tight for agents? That all of a sudden I think it's important for agents to guard their money.
Yeah, absolutely. I think it's important for agents to learn old school prospecting skills, and I think that, and no matter how you do it, you need to be doing something that works and sticking to it. Yeah. Look, everybody wants a magic red pill. But I can tell you, here's the advice I'll have for newer agents, and this is from experience. Whenever I've needed business, I get on the phone and I call my past clients. Yep. I call everybody I know and just say, look, there's business. I just tell them this. I have this conversation with them. Hey, here's what's happening in the market. And I don't care if they own a home already. They have friends. So if you guys are talking to your past clients, one of the solutions we use, the HomeBot, I think is incredible because it keeps you in front of people. Yep. And but I don't know. I mean, you want to pay someone $600 to tell you to call your past clients and ask for referrals? I mean, save yourself $600. Listen to me. Get to pick up the phone. It's that simple.
Yeah. Well, obviously, because I do coaching for YouTube, and YouTube has done well for me, especially heading to this year. I feel like all that last work paid off. I tell everyone, I'm like, it doesn't get you rich quick. Like, for some reason, it's like the hot ticket now. Social media, I'm like, it works. I'm like, it's just marketing. It's just brand awareness. But like, it's not gonna, like, I still have to follow up with these leads. I still have leads that are moving to Florida, and they're like, I'm renting now. I'm scared because it's just what it is. It's still a volume numbers game. It's just how do you get the people, I mean, I love it. Like, people call me, like, like we got a deal last year that came from a fair sale by owner. We had a veteran buyer, and they're awesome in Marietta, and we got them for sale by owner just because I picked up the phone and I was calling for sale by owner for my buyers. And I don't know.
And you went out to the neighborhood. You went out and drove that neighborhood too.
I did,
and that's important. And so
met his mom.
So social media are great. I mean, use social media. I've been on social media since 2006. But
it's true. I verified that. Whoever's listening.
It's true. It is true.
I verified it. It's true. Oh man, Twitter.
Yeah, but I mean, so like that works. But you've got to mix marketing with sales. You've got to mix marketing with prospecting, and you can't. I mean, too many people are not answering their phone in this business. I don't know how you do it. I mean, like, you got to pick up the phone. If someone calls
how many times people still get amazed I answer the phone.
Yeah, well, we talk
about
they'll be like,
this all the time. I picked up the phone. I'm like, yeah, why wouldn't I? Or if I missed a call, I'll be like, hey, I'll text you back. Like, I had someone from, the Orlando team's number, and they're like, they sent a text. They're like, I missed a call because it was my son's birthday. I'm not going to pick up the phone. So one day, I don't care about my birthday. I work on my birthday. But for my son's birthday, family's important to me. I'm not going to pick up the phone. But I sent a text. I'm like, hey, sorry, I got my son's birthday. Can't make it. I'll call you back.
I think I called you that. Yeah. That's a good practice. If you're on the phone, you send a quick text and say, I'll call you in 15 minutes.
Yeah, sure. Maybe if I was big enough, I could have someone else taking the phone calls. But it is what it is. It's a progression. But no, it's true. And you can't avoid the phones.
And bigger clients are going to want to talk to you anyway. So, so for agents, I'd say, look, I mean, the simplest thing you can do is go to your CRM, or and gosh, I hope you have a CRM. If you don't have a CRM, get one. Right.
Well, I think nowadays, because so many brokerages provide one, I think it's rare to find someone who doesn't have a CRM.
A lot of people aren't using theirs.
Yeah, that's a good point. I went on a journey to find a good one, but yeah.
You know what the best one is, right?
The one you use.
The one you use. And if it happens to be Google Calendar, that's your CRM. Look, we can laugh about that and say it's not the best thing out there, but if you're religiously using Google Calendar and the notes and all those things, fine, use it. But, get out there and call the people in your CRM.
No, it's true. I mean, I have a whole system. I think you would push the weekly email idea. I love that. Mm-hmm. I have HomeBot that goes out once a month. I've even started to add people who are, maybe one day they'll purchase or they're renters. It doesn't matter. I put them on the buyer HomeBot. It's a cool, great little market report. Keep them informed. And I think the big thing is they don't cost that much, really. Like if you're closing deals every year, it's really I'm not saying. I think a lot of times people want to go out there and they're like, oh, Facebook ads, or I'm going to dump all this money into something. I'm like, yeah, if you're broke, you're broke. You can't don't just waste all your money. But tools like HomeBot and stuff like that. Constant Contact's been great. I get 36% is my average open rate, and it's just value. It's little tips.
It's going to get even better.
Yeah.
I'm at the point now, if I don't hit 50%, I get mad. That means I did something wrong.
Well, I only got a couple hundred, so it'll get.
That's okay. Yeah. But I mean, you'll see as you start putting out good content, people will open more.
Yeah, that's what I'm curious. And agents are. I think a lot of the agents that are more my age or younger in the business, they're very quick to. They discount renter leads and stuff like that. I'm like, I don't care who you are. I mean, if we have a great conversation, you're going to be getting emails, and I'll stay in touch to some point. If you're crazy, you're crazy. Hey, sorry, I'm not going to work with crazy people. But and hey, if we've talked before, you're not crazy. Trust me. You wouldn't hear from me if you were. Because some people just, I don't know. They've been saying they're waiting for a crash for 20 years, and it's just never going to happen. So. If you're gonna do something, you're gonna do something. But yeah, I think even people who are renting in Orlando, they get amazed. I'll have a 5-minute phone call. Yeah, what are you looking to do? Yeah, quick conversation. Yeah, have a great day. And they're like, wow, I can't believe. Or if they send an email, I send a video email. I love sending a video email back. I'm like, hey, I was getting in the car. I'm in between appointments. Here's this. Here's your answer. Obviously, I don't do rentals for this reason, but hey, look in these areas, and. I don't know. Just be a good person. I feel like that's
we've done half-hour Zoom calls with people that we know are a year away. And you know what? Yeah. I mean, if you're that's one of the things you should be doing, right? One of the things you should be doing is talking to potential home buyers. And sometimes it takes a year for someone to come around and buy a house, but they do.
Well, yeah, and it's just I don't know. It's just because they're not going to pay you this second. I'm like, honestly, one of the quickest things I learned in real estate is you don't get quick sales. They happen, but not that often. For the regular agent, I feel like it's usually you meet someone and then within 12 months or less, they're doing something. Listings are a little bit different, sure, but I think when it comes to buyer clients, they tend it's a succession.
Let's flip. We forgot to talk about investors. What this banking crisis means to investors.
Yeah, what does it mean for someone? Maybe talk to seasoned investors, and then also someone who, because I have a lot of people who have cash, and they're like, I know I need to buy more real estate. So maybe talk on both sides of that coin. Oh, and I'd love to know your take on commercial too.
Yeah, sure. So let's talk about if you're going to buy single family homes. I think we're in a really risky time for investment real estate. By the way, it's always a good time to buy an investment property,
right?
If you get the right price. So they've made investor loans more expensive. Fannie and Freddie have made investor loans more expensive. Combine that with higher rates, and an investor loan might be at 7% today.
Yep.
That's not the end of the world, right? Because eventually what goes up will come down. It might take a couple of years, but you'll have a chance to refinance that loan down the road. But in the meantime, you've got to have enough money to get positive cash flow. You've got to be getting, I really think it's a bad idea for negative cash flow. And there's a whole bunch of people selling deals out there on the come. Oh, hey, you can value add. Hey, these rents are under market. Well, I look at that and go, why? Right? Why didn't why wouldn't you just raise the rents prior to selling it so you could represent to the new buyer, this is really truly market. So I think what you want to do, and sometimes you're going to have to put 35 or 40% down to get to positive cash flow.
Yeah.
Or you're going to have to get a better price. And so the challenge is, as you know, there's not a lot of homes on the market. So price might not be the best thing, might not be as negotiable.
Well, I tell some people they're just so afraid to look outside of where they live. And I'm like there's always deals out there. I'm like, but unfortunately, if you live in like San Diego or you're just getting started, even in Florida now, right? Like you're probably going to have to start looking in areas you're not used to. I have a friend, he's bought at least 5 deals, multifamily in like the middle of nowhere, New York. It's never going to appreciate. He knows that. But he's making about $800,000 net per month after withholding expenses and stuff like that. It's never going to appreciate because it's middle of nowhere, New York. But it's a college and prison town. There's guaranteed work. Even when times get tough, those people have jobs because you're not going to have prisoners not being watched at the prison. And those are the tenants he tends to have. And he does well. But guess what? He lives in Phoenix. And he's investing back near home. So the deals are there. I think people just might need to get a little bit flexible and realizing that, hey, some markets.
Well, and the other one too is, especially for new investors, if you're coming in talking to Cameron how you don't like the color of the house when you're looking at it, you're not an investor. Like that doesn't matter.
And also, I'm probably going to be, and I'll probably be honest with you up front.
Yeah, I mean, you're just not because your home is your home. An investment property is a property. It is a vehicle for you to make money. I mean, obviously you want to keep it up and you want it to look nice because you can command higher rents. However, ugly houses are great, man. I mean, ugly houses make great rentals. And by the way, you're providing a real service for people. So it's not like you're just making money, like you're providing shelter for people. And that's important. But again, like if you're not buttoning that deal up so that you've got positive cash flow from the get-go, like I don't care if you think you're going to turn it into an Airbnb. I know a lot of people say they can do that. We're starting to see that market peak. Well,
that's how I started investing was Airbnbs, and that was in 2017. And that was like the golden years. Didn't know it at the time, but that was like random townhome in Yuma, and I'm making like $500-800 a month, like middle of nowhere. It's Yuma. Like who vacations to Yuma? A lot of people apparently, and it did well. Yeah. That was my profit after expenses and everything. It was crazy. But especially in Orlando. Oh my God. Everyone thinks like, oh, I'm going to make an Airbnb. And I'm like, great. I'm like, do you know how many cities have laws against it now where you can't just show up and do it? I'm like,
and in Florida, they're getting worse and worse. So.
Oh, and then the occupancy tax, like the hotel tax. And yeah, it's just, I don't know. It's not somewhere I recommend for most people unless they've already done it and they know what they're doing, because it's not as great as it used to be, depending on what area you're looking at.
Well, so we're going to underwrite this deal as if it were a long-term tenant, right? Yeah. So we're not going to, we can underwrite some deals if they have 2 years experience on the tax returns with Airbnb. We can do some like that. But generally speaking, lenders are going to default and have the appraiser come in with what's called a rent survey. So we're going to underwrite the deal on that. And that's how we're going to approve you. And you should buy the property expecting if you have to make it a long-term rental, you're still going to cash flow.
Yeah. And what's funny is like I see people with success, like especially when like everyone looks at Airbnb because it's the shiny elephant in the room. But I mean, I've seen people have success doing similar concept, but they do midterm rentals for like traveling nurses and businesses, which can do well because guess what? In most jurisdictions, unless there's a minimum lease requirement, you can get away with that, and it can be more profitable, especially if a company's paying for it. Or they turn certain residential homes that are larger and in the right zoning, and they turn them into senior care living facilities.
It's a much different animal.
It is, and it's more of a business for sure that are hands-on.
It's absolutely a business, yeah.
But, I mean, I think everyone looks at the shiny objects, which is either house hacking, Airbnb, and they look at those, and I'm like, that's great. I'm like I still have people that come to me, and for both of us, for house hacking, they're like, yeah, I'm looking to, break even on my mortgage by house hacking. And I'm like, sorry, Jack. I'm like, I know places like Bigger Pockets pushes that really hard, but in most cities, I'm like, your goal is to just pay less than you would a normal mortgage. You're not really going to break even at current rates and prices and rents.
Well, That's in today's current rates.
In today's current market, it changes all the time. To preface that for someone listening years down the road. I mean, people still get amazed. They're like, how come you're not buying more rentals? I'm like, I'm not against it. I'm like, I'm just in the position where like, everyone thinks like they're going to buy one rental and it's going to change their life. I'm telling you right now, unless you have some money where you're looking to diversify and you're trying to get like the tax benefits of having a rental, it's still a business, one. And two, like if your concern is to make more money every single month, it's not really the most active way to start changing your life with monthly income. It's just in my experience. Like if you're making 500 to 1,000, I mean, that's great, but it's not going to change your life.
No, if you own 15 rentals and you're going to do that over the course of 30 years, that's great. Yeah. You will be in a pretty good situation.
Yeah. I mean, I see a lot of people nowadays who are doing really good starting businesses instead, especially lawn care, electricians, plumbers, those services that people really need. And, that tends to give a faster return, especially if you're already doing that job anyways. So that's just my take on it.
Well, so for investors, I think I'd be careful. Right now. One of the challenges, I'm gonna say this advice and drive every real estate agent crazy, but if you're an investor, look for deals. Now that does not, and if you go out there for a new place on the market and you think you're going to throw an offer at 10% below list price, that's not going to happen, right? If you see something on the market for 60 days, there's probably a pricing problem there. And you might have some flexibility.
I know. It's like it's both sides to this issue. I mean, you got the people who tell you shouldn't buy anything. And then you have a lot of like public faces out there. I'm not going to name any names. And they tell you like, oh, I'd be making stupid offers. Like, oh, well below list price. And it's like, yeah, that's great. I'm like, but it's bad advice for someone who doesn't know what they're doing. Now, if you're a big investor, you have calling teams, you have direct mail campaigns, like you're getting other situations where these people are struggling and they just want to get rid of a house, sure. But for the average day investor who's looking to either get in the industry or maybe only has a couple properties, I think they hear that advice and they're like, oh, I'm just going to start making 10% below list price offers. I'm like, that's great, but in most cities, I mean, you're still not going to win right now.
Well, and you're not going to do it when it comes on the market.
Right.
Not only they're not going to listen to you, the real estate agents who list properties are going to realize who you are, and they're just going to stop talking to you.
Yeah. So, do you think this is a market for problem solvers, no matter what, whether you're investing or in real estate? Yeah.
Yeah. I mean, so value adds can be good, like a beat up house. Someone can. It's going to be tough to flip, but someone can make some money and add value to it. So let's say you're looking at a rental that's, I don't know, a 40-year-old house in San Diego, right, or a 40-year-old house in St. Petersburg. That's, hasn't been updated. And you go in there and you spend $30,000 or $40,000 on that, and you can afford to do that. You're going to update, maybe it's $50,000. You update those kitchen and bathrooms. All of a sudden, $1,500 rent becomes $2,600 or $2,400 rent. And that's when you're going to really make some money. And then after a couple of years of having a history of $2,400, $2,500 a month rent, that value is going to be realized. You can sell the property. So I think problem solvers is a great one. Yeah. If you're trying to buy a home, look for properties that might have a problem. I'll give you an example. We talk about this all the time. If you're a VA home buyer and you're going to buy a condo, we get condos approved VA. And everywhere you go, the Navy Feds, they'll say, oh, gosh, it takes 60 days. We know that not to be true. But look, if that property's been sitting on the market and it doesn't have a VA home loan approval, or maybe the condos have low owner occupancy percentage, we could still get it approved VA, you might pick it up for a pretty good price. And so you're solving a problem there.
Yeah. And if you're a veteran, you do have some strong cash. Maybe it's not always buying down the plate, but I mean, you've schooled me up immensely on VA assumptions. 9 out of 10 veterans, it doesn't make sense for you. You're going to have heavy cash to do it. But I feel like the opportunity is still there. I mean, I almost had a veteran on that condo I sold. He almost did it. He was like, yeah, I'm buy like a home here in San Diego, my VA loan. He's older. It's like 60, 65. He owns a lot of rental properties, has great income. He's like, yeah, I just want to have my condo and head back to San Diego, and my home in Florida will be a second home. He was going to do a VA assumption. Didn't make sense because he's like, well, I want to rent it out in a couple of years. I'm like, yeah, they say 2A doesn't allow that. So, it didn't work out. But yeah, I think if you're a veteran who has the cash, I think unfortunately it tends to be officers, fellow enlisted, I feel your pain, but it tends to be officers to have that good cash. If you can pay that difference between what the veteran owes and what the purchase price on that property is, you potentially could take over their lower rate. So, the opportunities are there.
So we did one of these, was it 2 years ago or a year ago?
Yeah, man, I think it was a year ago and change.
It's on your channel, and they should read it. What does it say? Veterans can still get a 3% rate or something like that?
Yeah. Yep.
Someone should go back and watch that, because we give the nuts and bolts on how it's done. And if you've got cash and you can come in with the difference between the loan balance and and the purchase price, and you have VA eligibility, you can assume that loan.
Yeah. And
by the way, you can also do it for FHA loans. We talked about that too. So someone out there could do it. We can do it for FHA loans as well.
Yeah. Yeah. So, the opportunities are there. But like I tell everyone, I know we have a lot of conversations as well, is people between agents and home buyers and sellers, everyone comes and they want what's the easy solution? Well, I think in this market, there really is no easy solution. There's easier solutions. Home sellers still have a lot more power. So it's easier for them to make a lot of decisions, especially if you have good equity in your home. But a lot of people, they want easy solutions. And look, you're either going to give up money or time or both. And that's kind of just, what it is. It's just that weird market we're in. It doesn't mean it's a bad time. It just means, hey, you just got to be careful and make sure you're trusting who you're talking to.
Yeah. The other thing I'll tell people, if you're out shopping for a home loan, and someone tells you, oh, we're definitely not going out of business. Well, they're lying. I don't even know if we're going to be, you know what I mean? I've been doing this 30 years. The market's changed so rapidly. Now, brokers tend to know which lenders are healthy and which aren't. Mm-hmm. And what you don't want is, you don't want a loan with someone who pulls out, or you don't want to have someone pre-approved. You've got them with a certain underwriter over at XYZ Mortgage, and XYZ pulls out of the business, and they will have more of them pulling out. Like I said, when Home Point went down, I was like, what is going on? But
damn.
And there's mergers happening and all sorts of things. So you're going to get changes in underwriting guidelines. They're going to get harder. You're going to get, as lenders merge or drop out of the business, you're going to have less and less options. So I think it's important that if you're spending 6 months to find the right house, you're always talking to the lender. Every 3 weeks, you're talking to the guy that you did your original pre-approval with.
Yeah. Yeah, I feel like a lot of buyers out there, they're putting their blinders on. And they're like, oh, when I'm ready, then I'll start talking. I'm like, well, that's not really good decisions. I'm like, do you only see your doctor once every 5 years? No. I'm like, you should go a lot more than that. It's the same concept still applies. Whether you're watching my show for when I have interviews like this, or you're just in touch with someone, any good agent and lender will be in contact with you. I think all of us have experienced before we got into the industry and got licensed, you work with an agent or a lender and then they disappear and you never hear from them again. You think they still exist because maybe you see them occasionally, but they never reach out to you. And that's when the one thing I know we don't, our whole group that we work with, we don't do that. And, I think it's important that no matter if you're making a decision now or 2 years in the future, you got to make sure you're talking and getting informed, because you're probably working a job, you're too busy, or running a business, you're too busy to be worried about what the market's doing, because the news is terrible. It's toxic. I don't think you should be listening to it, because they'll always tell you it's falling apart. It's never the true story.
Right. Yeah. And by the way, when I get nervous, it's usually a time to be a little wary, but when I'm nervous, I also start scheming. I always have plan B, plan C. Everybody we work with, that's something you should ask a lender. What happens if plan A doesn't work? What's your plan B and plan C? And we always want to know that. So, and if they don't have a plan B and plan C and say, oh, you don't need to worry about it, they'll never go out of it, or this will never happen. Well, I've just watched on the commercial side, I've watched loan programs change in the last 90 days, 100%, changed tremendously. So you're going to see more and more change, and it'll get better. It'll get better, but it's going to get a little worse before it gets better.
Yeah, that makes sense. How much worse do you think, I was known as a crystal ball, so I always hate asking these questions, but how do you see things going? With the political climate and the way America is, it's really could go 1,000 directions.
I don't know, man.
I feel like anymore, nothing makes sense.
Well, let's say this. I'm usually pretty good on calling rates.
Right.
Wall Street, the one everywhere you look, every 3 weeks, the rates will get a little bit better, and then they get worse. And what's happening is the Wall Street guys are fighting the Fed, and that's the old prognosticators in the 80s and 90s used to, one rule they said was don't fight the Fed. So if you read the Federal Reserve minutes, they are absolutely concerned about one thing. They're not going to lower interest rates until home prices flatten and or rent prices stabilize or come down.
Well, I don't see rents dropping, but between, obviously, we both go between California and Florida and are moving over there this year ourselves. You know, I mean, rents maybe are slowing down in most neighborhoods. I don't see them going crazy, at least in Orlando, but they're not going down. I mean,
yeah, well, they're starting to now in Tampa,
in some areas,
certain areas.
Yeah, Orlando's still really competitive.
Yep.
Yeah, because I mean, before we were worried about our home being finished this summer, I was looking at rentals and putting in stuff, and like it's still really competitive around Orlando, for sure. The outlying cities are getting better, but man, anything close to that city center, still competitive. Well, that's my concern. It's like they still have to build more homes. We still don't have enough inventory. And you can increase rates to like 12%, and sure, it might slow things down, but like if it's the only home on the block and there's nothing else available, I mean, you know, like it's
so
still
we do have some good
demand.
news. We have some good news on the supply front.
Yeah.
So there's about 1 million to 1.5 million multifamily units coming online. Multifamily is apartments. There's 1 million apartment units coming online early 2024. That's a lot. That's going to be helpful. So
yeah, man, I just hate how we're becoming such a renter society.
We could talk about that a different time.
I know.
The good news is, like the one component the Fed's looking at so if you're a geeky person, read the Fed minutes whenever they talk. They talk about one thing called core CPI. Core CPI is a certain basket of goods and services. Everything in that basket is down below 2% growth, which is what the Fed's target is, except for the shelter component. And so if rents get down to the rent growth is under 2%, if home prices get to where they're flattening or the appreciation's under 2%, actually it doesn't even have to be that low because everything else is down below 2%. So we've got to, when the Fed sees that shelter is slowing down, the shelter costs are slowing down, that's when you're going to start seeing rate cuts. And then it'll be a party again.
Yeah, but my question is, because I'm just a man of 1,000 questions. If I know they're trying to solve like the apartments, and that's great, but let's say come end of next year, they get to where they want and they reduce rates, but we're still not at where we need to be. I mean, you know, it still doesn't really solve the issue, does it? Are you hoping that? Yeah,
we just got to keep building. Now, look, we could talk about how we don't like the fact that builders are incentivized to build apartments, and that's
well,
not true everywhere in the country.
Well, it's because you can fit more doors per acre of land. So I get that part of it. I mean, you only can build so many single family homes. I mean, a lot of major cities, I think, screwed up by not allowing more duplexes, triplexes, things like that be allowed inside their zonings. But hey, you know, it is what it is. So now they're trying to catch. I mean, San Diego, look at them with ADUs. Like they're just like pushing them through. They're like,
California has basically done away with single family zoning. I mean, they put a cram down on municipalities saying you're allowed to upzone. So, I mean, we can talk about property rights. We can talk about local rule. They did it in Florida too. They just did it in Florida, where it's called the Live Free Act. They just crammed down on the localities saying you can't do this, you can't do this, you can't do that. So you've got two strong governors and who are in lockstep with strong legislatures that are cramming down on the locals to build more housing. California's going to take them forever. But I think it'll happen in Florida pretty quickly. I think we'll see a lot more construction and a lot more units come online.
I mean, it's already expanded in the last in the last couple of years. It's insane. I mean,
yeah, but we had a million people moving to Florida since COVID started. A net million. That's crazy.
Yeah, it's so many people.
Yeah.
So many people. I mean, I love it. I'm all for it. But, you know.
Yeah. But they got to find homes, right? They got to find places to live.
Yeah, I know. Yeah, so many people are just like, oh, I'm just going to rent. And I've had a couple come back and be like, it's a lot harder than I thought. because everyone's coming to Florida picky about what they want.
Yeah.
Like, can't be picky. Got to get established
Yeah.
first, and then you can figure it out.
Yeah. You know, you brought up a thing about problem solving, and I think this is unique for investors out there. If you're a first-time investor and you can buy an older house that's being used as a rental or an older condo, or I really think if you're a first-time renter going in and trying to do the Airbnb or vacation rental, you're just going to get really surprised. I just was on the phone with someone who bought a property in Cape Coral about 2 years ago. Did real great during the snowbird season, and she doesn't have bookings. And the challenge with that is Cape Coral went through a hurricane, and so while the rest of the city's rebuilding, and she was very fortunate, but the rest of the city's rebuilding, people just don't want to go where there's hurricane damage. They'd rather go to Sarasota or wherever, and so they'll book places there. So now she's got this, and my advice to her was go find a traveling nurse or someone that can get in there and fill that gap for 5 or 7 months, because it doesn't look like it's going to be a vacation town this year. It'll be back, when they clean up. But
well, I mean, I had a good video I did for my Moving to Orlando channel, and they've actually done a lot of extensive studies on damaged hurricane localities and how the real estate's affected. And it's really only the first year to maybe 2 years that you see a major drop. But what's funny is when you look at the 5-year projections, especially after Katrina and all that, the real estate actually outpaces other localities in the state that it's from or in the bordering area. So the appreciation actually comes back stronger when you look at a 5 to 10 year projection. So it's a fun thing. I mean, I'm nerdy too with numbers, and that people always get caught up in the news. Yeah.
Yeah. Look at Pensacola. Pensacola went through Hurricane Sally in 2020, or I think it was the end of 20.
I think so.
Or 21. I can't remember which year it was.
Right.
But they came back. And I was up there right after the hurricane, and it looked like, oh boy, it looked bad. I mean, there's just a lot of debris on the roads because they're waiting for the county to pick up all the stuff. But it's rebuilt. Boy, there were some great opportunities there. I wish I took them. There was a house you could have bought on a golf course. I mean, you would have had to do a full gut and remodel. You could have bought it for $100,000, a couple $100,000, maybe $250,000. I think is what I figured it would cost. Those houses are selling for $550,000 now. So, if you've got some capital and you want to look for, you want to solve problems. I love the way you put that. And so maybe Cape Coral is an area to be looking at right now. Maybe maybe Englewood is an area to be looking at right now because the people aren't vacationing there right now.
Right.
They're cleaning it up, and you might get some deals there, and it will not stay down for long. You're right. The rebound is it
always stronger. Yeah, it always outperforms. It's not like insane numbers, but yeah, it's always a couple percentage points higher than other cities that weren't affected. So yeah, it's one of those cool things I realized that was great.
So there's two things that maybe we can kind of, as we kind of get towards the end of it, I'll just kind of impart this.
Yeah, impart your last knowledge for everyone.
California and Florida real estate, okay?
Yeah.
The one thing I can tell you, young people are always going to go to Los Angeles. Like nobody grows up in Iowa and says, oh my gosh, I really want to get into the textiles business and move to Boston. Like that doesn't happen. Everybody wants to be in the movie business and hit it big in Hollywood. That dream is still alive. And so California is not dead by any stretch of the imagination, right? That's the one thing to remember. But it's not dead. There will be young people that try to make it in Hollywood, and that'll happen forever. And California's a diverse state, or there'll be people that go to the Bay Area, or people that go to San Diego because life science is headquartered there. So there's still opportunities in California. The other thing, young people like to go to California. Older people are always going to go to Florida, right? That's not slowing down soon either. Yeah. Now, there's a lot of young people going there too, but Florida is a vacation destination. That's not going to change. So just because Fort Myers went through a hurricane and it doesn't look super pretty today, I promise you they'll bounce back quickly and they'll come back.
Well, looking at numbers, I've seen a lot of families without kids or couples. They come to Florida, but then I have so many that I've talked to this year, at least 15, and they're hopping from city to city because they can't find what they want in Florida. But it seems to make sense, But if you got a family, I've been hard pressed to find someone who's moved to Florida with a family and not enjoyed the experience because there's so much to do.
Oh.
I love California. Like weather's great, sure, but in Florida, I mean, I love to hunt, I love to fish, and I can drive to Georgia, and I have a lot of options, right? Especially for fishing, of course. But then I have Disney World. I don't care about it. My wife loves it. Theme parks. We have side attractions. I call it, you have a lot of side stuff. Florida's the place where you still can find old America throughout those hidden towns, little side shows, like, nature preserves, things like that I find enjoyment. So I think for having a young family, I enjoy it.
I think you're on the right track there.
Yeah.
Well, that's about all I have about the banking crisis.
You're good. I think it's great insight. If someone wants to, if someone is either a real estate agent and they want to get a hold of you, or they are a consumer who's like, they love what you're saying, and they feel like you're the guy that could help them, lead down that path. Where can they find you? Where can they get a hold of you?
858. I'll say it twice. 858 area code 699-4590. That's
great.
858 699 4590.
And Brian and Deborah, his wife, are an amazing team, and I think it's some of the best service I've experienced when it comes to lending. But also, you are also in commercial real estate. So if you are even a commercial real estate agent, or you come across a situation where you're trying to buy commercial real estate, it doesn't really matter to me. Brian also handles that. Obviously, Deborah is fronting the residential side, but they are both like wealths of knowledge. And so no matter what kind of real estate you're trying to get into, I think I can easily say this: Brian either knows it or he knows a guy or gal who could help you do it.
That's true.
That's
true. Yeah. By the way, you could also go to BradyMortgage.com. That's a landing page for us, so they can find us all.
Great. I'll link it down below too, so that way they
thank
can.
you.
That way, yeah, absolutely. So, all right, Brian. Well, it's been a pleasure. Thanks for coming on. Everyone listening, I hope you got value in today. Obviously, down below, you can always find out how to get a hold of me, and just like every show, Brian's information. I'll put his website down below if you want to go there and check that out. But Brian, thanks for having here, and everyone watching, have a great rest of your day.
See ya.